U.S. auto production is slowly increasing after 2 months of tariffs. Phil LeBeau joins us right now. He's got the details on that. Phil, good morning.
Good morning, Becky. This is a good snapshot to look at what the impact has been of the tariffs. And remember, anything built in Canada, Mexico, over in Asia, in Europe, there's a 25% tariff for those vehicles coming into the country. There may be some offsets with USMCA, but the bottom line is this. Automakers have said, what production do we have in the U.S.? How, or capacity, excess capacity, how can we use that to build more vehicles in this country? And look what we found. J.D. Power ran the numbers for us. They track this every single month. And what they found in the first quarter, 51% of the vehicles sold in this country were built in the U.S. But look, it's gradually increased since then, up to 54 in April, 55 May. Last month, 56% of what was sold in this country was built in this country. Bottom line is this. The automakers have found those areas where they can add a shift, add overtime, add plants that are already running, and that's what they're doing. They are adding production at those plants. It's not a lot, but it is sizable enough to move the needle in terms of amount of vehicles built in this country. The sales rate is slowing down. I get this question from people. They say, well, there was a surge in April. People were worried about prices skyrocketing, so they went out and bought them. And yes, it has come down, though. 15.3 million, according to Cox Automotive, was the sales pace last month in June. The average transaction price, by the way, really hasn't ticked up much. It might be a couple of $100 higher in June than it was back in April and March. 48,907 was the latest reading in terms of what people actually paid at a dealership. As you take a look at Ford and GM, they are two of the companies that have, as quickly as possible, taken advantage of excess capacity, and they get credit for that. Ford's Q2 sales in the U.S. up 14.2%, GM's up 7.3%. Of course, guys, the real question will be, what's been the impact on North American margins? How much of this tariff discussion and the tariffs that have been implemented, how much will that impact the margins here in North America? Because they still are importing vehicles from Canada and Mexico, though they have slowed that down to a certain extent.
Phil, I also wonder how much of this is because of the already existing 25% tariff on European cars that are coming in. I was just reading over the weekend about how it's costing German automakers billions at this point. Is there...
Yeah, we'll see that. That'll be a big question, Becky. And then the question becomes, at what point do some of the foreign automakers say, you know what, we can spread this out over our global platform. We'll just have to eat it in the margins. Or do you have some automakers, and we've heard discussions about this, but nobody's pulled the trigger, who say, I do have to put a manufacturing plant in the United States? Because let's be clear here, despite Peter Navarro saying they're all going to come rushing back in, nobody has announced putting a final assembly plant in the U.S. since the tariffs began.